very good day to you wherever you're watching us from. Thank you very much for watching Smart 24 TV and welcome to the program. This is Financial Markets and my name is Anthony Sebali, your host. And thank you very much for choosing to join us this morning. Of course, today is another very beautiful day. It's the 10th of August where we're looking at, of course, the Kenyan election, also results coming in slowly by slowly. We're looking at our brothers there coming to the end of their general election. So far, at least we've registered some calm. There's nothing much that is alarming. And of course, the markets are moving as normal. And we shall also be looking at how the Nairobi Securities Exchange has also been able to react to some of these incidents that have been happening in Kenya, particularly their general election. And in Uganda here, things are quite normal. However, of course, the index here in Uganda, we're seeing that there was some movement yesterday, and we're seeing that there was some improvements here and there. And we're looking at several good performance put-ups by several companies, at least for the matter of performance as regarding the local companies, and also looking at also the cross-listed companies. We're seeing some very good activity at the moment. Thank you and welcome. My name is Anthony. If you can join us on this show, you want to do, maybe give us a comment or give us something, some feedback, or you have a concern or question, you can go to our online platforms. That is on Twitter at Smart24 TV or the hashtag Financial Markets, and you can still visit our YouTube live stream at Smart24 TV Live and leave a comment in the comment section, subscribe, and also get a notification bell so that you can get notified whenever we put up these videos. Thank you for also keeping in the know, keeping in the investment and savings world. This show is all about savings and investment, and here we look at particularly saving and investing in financial markets, and there are four kinds that we look at basically. Number one is the stock market, and this stock market gives companies a chance to get capital from the public, and the very first time these companies are doing it is called the primary market. And on this primary market, we're looking at having a company list on the exchange for the very first time, and this time we're looking at the company selling its own shares to the public, and this of course comes with several benefits for the company, being able to acquire this cheap capital, patient capital, and on the top of that they are able to get listed on the exchange, having their shares listed on the exchange and trading on the secondary market. And if you want to have your small enterprise, a business, you don't need to have a very big business at the moment. All you need, for example, on the growth enterprise market segment, you have at least several small and medium enterprises as well coming up to list on the exchange to get some access to capital. That provision as well is available on the Uganda Securities Exchange. You can visit Uganda's Securities Exchange in their offices at Nakawa Business Park, or you can actually give them a call or go online and find out more about Uganda Securities Exchange. They were the body that is mandated to be able to carry out securities trading or exchange of securities in Uganda starting 1997, and you can visit them on www.use.ug.org, and these of course give us data here that we share with you, real-time data that is coming in from the Uganda Securities Exchange, and they of course look at the stock performances for every counter. They help look at also the number of shares that are traded on given counters, that is the volumes. We also look at people who are gaining and people who are losing value on the stock market and so on. Of course, this is courtesy of the Uganda Securities Exchange. Now, the other side of the market is the debt market, where we look at debt instruments. And this debt market is quite basic. We are lending to government, we are lending to corporate bodies. So if you ever wondered how government is able to raise over 48.1 trillion of the budget it doesn't raise it through just revenue. You might find revenues about actually 40% or even less than that. For example, this year you have about 22 trillion that is going to be collected in revenue out of the 48 trillion, meaning not even half of the money government is going to use in this financial year is obtained from revenue. Now, the other sources of government money or government budget financing is through these debt instruments, and they're called debt instruments because simply we are lending to government at particular interest rates. We are being lenders. We are becoming lenders to government within a specific period of time. For example, just yesterday, Tanzania, of course, declared that they are today issuing a bond worth over 55.6 billion million US dollars, and that this particular treasury bond is going to last about 5 years. And these 5 years, it comes with an interest rate of over 8%. This percentage, of course, calculated off the bond, depends on how much of the bond you've been able to buy. And so these debt instruments also give you an opportunity to buy into government bonds, and also being able to contribute to government's revenue, being able to contribute to the growth of the country, but government pays back with an interest rates. And amongst all the financial markets we have, of course, these are viewed as almost risk-free investments, where we are seeing that very many people invest in them thinking that definitely government will not default. Even if government changes, you will still have your bond of course registered in your name with your account, and you will still receive a coupon of your bond, the instrument you've been able to buy. And in Uganda in particular, we have bonds that are ranging from 3 years, 5 years, 10 years, and then you have 15 years and 20 years. In Kenya, you even have 30-year bonds, bonds that stretch as much as 30 or more even years. But particularly what is interesting about these bonds is their coupons. They come with coupons that are paid periodically. And in Uganda, we pay coupons after 6 months. So if you lent a government today and you bought a bond, of course, the unit for buying a bond is 100,000. That is buying 1 unit of the bond. So if you bought 10 units, that's at 1 million. That is 100,000. 10 units of 100,000, because you cannot buy, for example, a bond at 150 or 220. You need at least a unit of 100 for each bond you're buying. And so if you bought maybe 10 bonds at 1 million, that is about 10 bonds. You're having 100,000 each, and the coupon rate of these bonds is about 10%, and that is just saying the least. But there are bonds that go up to 17%, bonds can go up to 15%, and so on. So if you're lending to government within this sphere of 15% interest or 10% interest, you're expecting at least after 6 months you have 150,000. That is if it's at 15%, and you've lent them 1 million Ugandan shillings after 6 months. And it depends on the the period of time of maturity of the bond. If it's a 10-year bond, you will receive that money every other day after 6 months until the bond matures. When the bond matures, definitely they will give you back your initial deposit, which you were able to invest in this particular bond. And why this is very important, again, like we said, this is saving and investing. Every time you save and invest, you're giving money value, because this money that you're lending to government is going to be used by government to do several things, to build roads, get infrastructures, get in place hospitals and so on. And these, of course, have returns to government, but also give us, development, economic development, and improvement in, social well-being of the, the entire country and the citizens of the country. And we see that this comes back to you as well as your money, as value. Your value for money increases. So by the time you get back this money, you've already earned your coupon and you've been able to earn some value on your money as well, getting back the initial deposit which you are able to put into that particular instrument. Now you might want to sell the bond or the bill before, but the treasury bills, for starters, is also a debt instrument, but a short-term debt instrument, and you're looking at 3 years, actually not 3 years, 3 months and 6 months, or maximum of 1 year. But this works simply within a period of 1 year, so nothing beyond a year. Those are treasury bills, and they're auctioned at Bank of Uganda every 2 weeks, and of course different stakeholders are called upon. But before this instrument expires, especially when we look at the long-term instrument, the bond, before it expires, you might still have chance to be able to purchase, to be able to transfer this bond to someone else. So you don't have to wait until the bond matures so that you get back your money. There are people still who might be interested in a bond that was issued in 2012. So what you do, of course, through maybe stockbrokers, because stockbrokers as well deal in securities. Some of the stockbrokers, of course, are licensed to also deal in securities. And so you approach them and you declare your need. You want to buy a bond at a particular price, and they look for somebody who is willing to sell. So when this person sells, they transfer the interests, the coupons to you. Of course, that is starting that period you've bought the bond. So from then on, the coupons are coming now to you because you've been able to buy out this other bond to yourself, to your account. And all this is done in, of course, with the help of the Securities Central Depository account. Currently, there have been 2 accounts which you needed in order to trade on stock markets and also in order to trade on the debt instruments. That is the Securities Central Depository and the Central Securities Depository. And this has been, of course, because the CSD, that is the Central Securities Depository, was reserved for the banks, because commercial banks also are able to purchase bonds and bills and sell them to their clients. But recently, there have been moves to actually merge these 2 accounts and have one single account where you have a Securities Central Depository where you can keep both your debt instruments and also your stock or your stock that you're buying from the stock market as well, in such to find all these things in one whole pool. Now, so far in Uganda, these are the 2 main financial markets we are looking at, and in particular here we look at the stock market in detail because we really are interested in you understanding how the stock market really works, and also getting you started on your investment journey to see that you, a trader in Chikubu, an engineer, a lawyer, a student, get to know that you can actually be able to possess shares, you can be able to benefit from shares, you can be able to transfer shares to different people, you can be able to trade shares on whatsoever grounds. And this is a very simple and basic process. Those are the 2 main financial markets that we are looking at. Of course, you, our dear viewer, getting to understand first of all, and then secondly, you getting started on your investment journey. This space of financial markets, especially the capital markets, talking about the stock market and so on, is regulated, well regulated by the Capital Markets Authority. This was a body, of course, that was incepted by government, and the government came up with this body to be able to regulate this space because it's a very sensitive area. It's dealing with people's money, and so there is strict regulation that is required, and this helps actually also the markets to be able to be safe and held accountable in case of anything that may go wrong. Within still the sector, we have other products called derivatives, though in Uganda at the moment we don't have derivatives, but there are countries that do have derivatives markets, where derivatives are specialized products, of course with specialized ingenious or ingenuity, because these of course require people who have invested for some time and understand really the market, because derivatives are kind of like bets that, for example, people can bet on something like the dollar will go up, and they bet on that. And if you lose the bet, you lose the money. If you win the bet, you win the money. You get more money. So there's that also segment, but not yet really here in Uganda. And then also we have the commodities market, which of course we see in very developed exchanges in New York, in Shanghai, and so many other stock markets or stock exchanges, because here we are seeing that we list commodities, for example, oil, precious metals like gold and silver, diamond, copper, and tin and platinum and so on. And these of course are bought by several people, and also the prices are fixed depending on how their demand and supply is in that particular country. But we are yet to get there, but for now you have at least to be able to open yourself an SCD account and buy some shares. You're going to see several companies come up to you. Of course, here on the show we have British American Tobacco, we have Kenya Airways, we have MTN Uganda, we have companies like National Insurance Corporation, which only trades at over 6 shillings, 1, 2, 3, 4, 5, 6 shillings per share. You just have 6 shillings and you buy yourself a share, and of course you move on. And that is a very simple procedure that we would also want you to be able to be part of on the program. Our partners here, of course, the OTEX East Africa, are also giving you chance to be able to buy securities, especially the bonds, across East Africa with the convenience of your small phone, without need to even access the internet, by simply dialing *165 hash, star 292 hash. You can be able to buy shares, buy bonds across East Africa, and that comes of course using your MTN mobile money. They give you more money and no hassle. That is under the Zabo initiative, and of course OTEX East Africa in conjunction with OTEX Clearing. And the ZAB initiative was of course brought up to increase access. You can see you can be able to buy, you can be able to sell, you can be able to learn more about the products, and you can be able to choose which products are convenient for you as an individual. And using your mobile money, you can withdraw some money off your account onto the OTEX account, and of course input your PIN, and they will give you a notification that you have actually received your security. The opening time is 8:15 for OTEX East Africa, and the closing time is 3:15 p.m. 8:15 a.m. to 3:15 p.m. Thank you very much for choosing, ladies and gentlemen, to remain with us. Of course, coming up, we have some action that happened yesterday on the stock market, looking at some of the top gainers. Did you know Meme came back on top yesterday, as well as KCB, Centum, and MTN as well on the gaining side? And of course, we had a couple of losers here. Uganda Clays has been silent for quite some time, but has made some noise yesterday on the market after it lost about 2.16% of their price valuation. You're looking at also NMG after having lost about 0.72% and other counters there. We're going to take a very quick break, and we'll return with details of the stock market and more about what you need to know for the stock market that happened yesterday. Be with us. We'll be right back.